here's the significance of Ethereum. It's the technology. It makes possible the most widely traded crypto. It's not Bitcoin, it's the dollar. Tether. Tether's a token that tracks Bitcoin. It's the technology that Ethereum promotes that makes that happen. And it's what most people don't know. When you click on volume on one of these crypto sites, the most widely traded is the buck. It's not Bitcoin. So Ethereum makes that happen, and it's potentially going to have an ETF launch. But I think what people are overestimating, it's just not as widely known as Bitcoin.
It's way less known. I get that. But if you buy Ethereum, are you just what are you buying? A currency pair?
Well, you're buying something, from my standpoint, it's somewhat like Bitcoin. It has definable diminishing supply. You can see that by code, and increasing demand and adoption. From my standpoint, everything else is, okay, well, what it does, it helps make tokenization possible, NFTs, things like that. So
Damian, save me here.
No, I can't save you here, Tom, because I don't believe in crypto, but Mike McGlone and I know this. So let me ask you a real question, Mike. The gold to oil ratio is at its highest since May of 2021. Yeah. Gold prices. I mean, and look in the volatility market, right? I mean, gold vol, what a premium you can extract by selling gold vol relative to crude vol. What are you seeing in those two markets right now?
Well, Damian, I appreciate you going there. Maybe you can tell we sit next to each other. We've been the breakfast club at Bloomberg starting at 6 a.m. for decades. Yeah. That's the most enduring trend in commodities, is gold beating most commodities, particularly WTI crude oil. So at 31 barrels of WTI per 1 ounce of gold, I think the next step is that's going to go to 60. That's not profound to say that, because that's the trend. Right. I mean, so you look at it as a commodity guy, what's the enduring trend? So gold on the year is actually up more than that AI-driven S&P 500. It's backed up a little bit, but it's Chinese buying is what's significant to gold.
Chinese buying, if there's just as a general statement, central bank buying, what would force central banks to sell gold?
Mm-hmm. Right now, the number one thing I think, Tom, would be significant détente. If President Xi picked up the phone and called President Putin and said, dude, this is not working, this unlimited friendship, to me, that was the trigger that flipped the whole world order towards, okay, we're worried about the dollar, we have this situation of wars going on in Europe and Middle East, and we have the second largest country in the world somewhat supporting it by the unlimited friendship, so it's tilt towards gold.
Well, I'm looking at a chart here from Mike McGlone, Tom, and you won't believe this. The man is overlaying the China 10-year yield relative to the Bloomberg Commodity Index, and there's a significant divergence, right, that takes place during the pandemic. So I think this speaks to what you're talking about. But talk to Tom's audience, my audience, about the short squeeze in copper. Talk to us about what is really going on there, because I think copper, even though gold is up significantly, is really the best performer this year.
So copper has been the problem with Dr. Copper. It looks like it was more driven by managed money futures, i.e. hedge funds getting way too long, riding the trade, and now they're starting to hit their stops. And there's a good reason to hit those stops, is when you have prominent economists come out and say, oh, it's going to go to, it went up from 4 to 5 and it's going to go to 6 or 7. That's usually when you look at copper, it's so autocorrelated, it's typically going down. But you measure Chinese bond yields, 2.3% is the Chinese 10-year note. U.S. 10-year note is 4.6 or 4.5 or so. Right. That's a significant deflationary signal from a country. You can't believe what they say, but you got to watch what they do and watch what their markets are telling you.